Some financial experts will tell you cash is trash. Others will tell you that cash is king. Who's right? What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Our cash loses value every single day. Yet after the 2008 crash, interest rates have been dirt cheap, so people and businesses were able to borrow money for almost free. When cash is easy to come by, it's easy to believe that cash is trash because why in the world would you save cash when the Fed can just print it 1 trillion times faster than you can save it? By the way, in this video, when I say and when people say cash is trash, I don't mean that people will actually take their cash and just throw it in the garbage. It means that your cash is losing value, so it is better for you to invest your cash instead of actually just keeping it in your pocket. Oh, well, I'm glad you told me that. Prior to this pandemic, if businesses had more than just 1 month's worth of cash in their bank account, it was almost considered bad business practice because you were stifling growth by saving your money. So investors and board members were pressuring businesses to save as little cash as possible and invest this money back into their business because if you really needed to buy anything, you could just finance it. I mean, what would you save your money for anyways? A pandemic? Oh, greedy businesses need to learn how to manage their money. Yeah, well, people operated the same way. 0% APR became so popular over the last decade because no one actually had savings to buy a cell phone outright, so they would finance it. And then they'd finance their car and their furniture and their clothes. Now we have this culture in America where people go to work just to pay your bills and hopefully you'll have enough cash left over to buy some extra guac at Chipotle. Just wait until I can finance my guac. Shh. Almost every person and business in the United States lived off of credit, which was no big deal when things were good. But then came this pandemic out of nowhere and the economy suddenly stopped and money stopped flowing. So now everybody had these expenses to pay, but there was no money coming in. So the government and the Federal Reserve Bank had to print trillions of dollars and pump this money into the economy to keep the thing moving artificially. And that's why cash is king until it becomes trash. You need to have savings, okay? I don't care how bad interest rates are. You need to have some cash saved up to protect you from an emergency. But you do not want to save all your cash. Your goal should be to save 6 months worth of expenses in cash in a savings account. So if you spend $5,000 a month, that means you need $30,000 in a savings account. This $30,000 is not your down payment for a new house and it's not your new car fund. This $30,000 is your crisis fund. After you got your savings in check, cash becomes trash. Now, the only reason why you should be saving money from here on out should be to either save for a big purchase or save to make an investment. You should not be saving your money just to save it, and you should hit that thumbs up button below because if you don't, then YouTube doesn't share our video with anybody else. I wasn't supposed to be on YouTube. I was supposed to be a doctor like all of my Indian friends, but I kind of took a different path. However, I know quite a few doctors, and a few doctors have talked to me about how they have $1 million or more sitting in their bank account. This $1 million that they have isn't a down payment that they're saving up for a house, and it's not there to be used as an investment. Their cash is just sitting there in their bank account because they don't know what to do with their cash. Now, saving $1 million is better than going to Gucci and buying up everything. Although $1 million will probably only buy you like one shelf. But there's so much more that you can do with your money. Like if you're 40 years old and you have $1 million in your bank account, well, by the time you retire, that $1 million is gonna have only the buying power that $500,000 does today. That's what inflation does. The value of each dollar you have comes down while the price of everything around you goes up. The money you have in your bank account isn't growing. Like if you have $100,000 and it's sitting in a traditional bank account, after 10 years, you're gonna have $100,000 and some change while your rent, your groceries, your extra guac keeps becoming more and more expensive. Now, obviously, you can combat some of this inflation by moving at least some of your savings over to an online bank like our sponsor CIT Bank, because they will pay you a whole lot more money on your savings. CIT Bank is a regular bank. They're just online, which means they have less overhead, which means they can pay you more money in interest. They don't charge you any monthly fees. It's free to open an account, and your money is safe because they are FDIC insured. If you want to see how much more you can earn on your savings, conditions apply, but I got the link to where you can do that in the description below. Minority Mindset is a partner with CIT Bank, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's completely free to open up a bank account. So if you want to learn more and see how much more you can earn on your savings, I got the link to where you can do that in the description below. At this point, everybody says something like, well, Warren Buffett has over $100 billion saved in cash. What do you gotta say about that, Jaspreet? Yeah, you're right. Warren Buffett is sitting on billions of dollars of cash. But that isn't his personal savings account. That savings that you're talking about is his investment fund that he's waiting to use when he finds a good investment deal that comes his way. It's not just cash that he wants to just sit there. He wants to invest that money, but he's waiting for a good investment. Warren Buffett talks openly about how he hates holding cash. Remember what I said before, cash is king until it becomes trash. You need to build your savings cushion, but after you build your savings, after that, cash becomes trash, so you want to invest as much cash as you can after that. Every dollar you make needs to have a job. Either it's a spending dollar, it's an investing dollar, or it's a saving dollar. We already talked about your savings money. You want to save 6 months worth of expenses into your savings fund, your savings bucket. Once that's full, you should only be adding more money into your savings if your monthly expenses go up, or if you have to pull some of the savings money out to fund a crisis. Once that's full, you want to be doubling down on your investments. Your investment money is the money that you're investing, whether you're buying stocks or real estate or commodities, whatever. You don't have to go out and spend all of your investment money today, but you need to know that this is the money that you're going to be investing and that you're looking for deals to buy. Like the people who had cash ready were able to buy stocks at a huge discount when the Dow Jones fell below 19,000 points in March. The people that didn't have an investment fund couldn't. No investor wants to hold cash in their investment fund forever because your cash is losing value. But I also don't like overpaying for my investments. Like I made a video back in February of 2020 where I talked about how I was selling some of my investments and how I was holding on to more cash because things just weren't making sense in the economy and the stock market was right around record highs. I'm not gonna lie, I got pretty lucky with my timing. Like I didn't predict that this pandemic was gonna completely shut down our economy and put our stock market and economy in free fall in March just 1 month later. But this gave me the cash that I could use to buy more stocks in March when the stock market was in free fall. So I had more cash waiting to be invested, and then when I found a deal, I spent this cash on my investments because I would rather have cash flow than hold on to cash. After you got your savings in check, you should only be saving to buy something or to make an investment. Cash flow is the income you get for owning investments. And so what I do is I start filling up my investment bucket, and then I start looking for investment deals. And as soon as I find an investment deal, I take this cash from my investment bucket and then I spend it to buy this investment deal. This is why I say cash is king until it becomes trash. You need to have your savings, okay? But once you have your savings, now your cash can do so much more than just sitting in your bank account collecting dust. But things get a little bit trickier when it comes to a business's finances, and this is something you need to understand even if you don't plan on running a business, because if you're investing in stocks, you are investing in businesses. Managing a business's finances is hard. I can tell you from personal experience because I'm still trying to figure it out. I run a financial news and education company, and we have a lot of expenses. Rent, salaries, softwares. We don't have any investors or outside capital, so our business has to make $1 before we can spend $1. And that's why a savings cushion is so important for us. Right now, I've been following the 6-month model where our business keeps 6 months worth of expenses in cash. That way, in case an emergency happens or a crisis happens, our business can continue to operate even if we don't earn another penny for the next 6 months without even slowing down. On one hand, maybe this isn't enough. Bill Gates talks about when he was building Microsoft, it was his goal to keep 1 year's worth of expenses in cash in his company's bank account because if the economy slowed down or the business slowed down, he didn't want to have to stress about shrinking the business, and he could keep the business going for a whole year even if he didn't make a penny during that year. On the flip side, the more you save, the slower you grow, because if you're saving cash, that means you're having cash sit in your bank account that you could be using to help grow your business. But naturally, that comes with more risk. Yeah, you can grow a whole lot faster because you're not saving any of your money, but if the economy slows down or we run into a pandemic like we're seeing right now, then you have to start firing people immediately to start saving cash. There's no one right way to do it. Businesses with both philosophies have succeeded, so if you're investing in companies, you want to make sure that this company follows a philosophy that you agree with. And this is what financial education is all about. Understanding how money works so you can use your money as a tool to help build your wealth. And if you're looking for an easy way to up your financial education, well, that's why we created our free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get our free ebook and our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are different from our financial news emails. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about what you should be buying during this 2020 crisis to help build wealth, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.